Mr. Kern, there's a question. Somebody just wants to double check your numbers here. Is it true we're only collecting $1.4 million in calendar year 25 for all that new construction? Because it seems to this person that $1.4 million is like 1 to 2 homes in Jerome Village. So is your forecast accurate?
That is an estimate of 1.4 million in revenue growth due to new construction, and that may be the value of the houses, and for example, for the sale prices, but that wouldn't necessarily generate that much in taxes. For example, our forecast is if you look back over time, we feel like we're pretty accurate in what we do. We typically come within 1%, maybe as high as 2% within our estimates when it comes to revenue and expenses. And we feel really good at where we're at to be able to make the decisions. And also, from an accountability standpoint in our transactions, we are audited every year by either the auditor state, or if they don't have enough time and availability to it, as an outside independent auditor. Plattenberg's been our recent auditor, who has offices in Cincinnati, and they used to have one in Dublin as well. But from that standpoint, that audit us every year. And so one of the things they do look at the 5-year forecast, but they look at our transactions, our financial statements, whether we do operate essentially, unlike maybe some businesses. Now I'm getting a little bit in the weeds here from an accounting standpoint, but we essentially operate 365 days a year on a cash basis, which means essentially cash in, cash out. That's our 5-year forecast really when it comes. And they look at those transactions to make sure that we're reporting correctly on those as well. But we also do GAAP financial statements. If you ever seen our ACFR, our annual comprehensive financial report, there's a very detailed information in the back and or throughout, I should say, throughout the document when it comes from a GAAP basis, which is something we do for many reasons. There's a lot of data in there that is very useful, but it's very useful when we talk about issuing debt in our bond issues that we have, and $145 million, no new millages on this issue 12. We go to rating agencies when we do go to issue debt, and they rate our debt as our debt is typically tax exempt, which means people who buy it do not have to pay federal or state income taxes on it. But anyways, as we go through a process, and Dr. Marshausen knows that. As when we did the last issuance, he was here for Jerome Addition and the Kaufman Skin Project for those debt issuance. It's a very thorough process where they're looking at our 5-year forecast, they're looking at our enrollment projections, they're looking at our GAAP financial statements, they're looking at a lot of stuff. And I know I've said a lot. So really, what I want to get to is, and we're proud of, is through S&P. Which used to be called Standard & Poor's, we have the highest credit rating of AAA, which allows us to borrow money at the lowest borrowing cost.
Thanks, Brian. And those rating calls are like an audit on steroids. When you go through that rating process and you've got those rating agents grilling you in questions, it gets pretty intense.
Yep.